Well, hi. I wanted to look at the euro today from a purely technical perspective. So I'm going to ignore all the fundamentals like CPI coming out on Tuesday and the overall economic system, the macroeconomic situation that's going on with stock markets and commodities and currencies. Let's just ignore all of that for this video and have a look at the technical pattern. And I'm just going to look at the euro today. So it's going to be a very simple analysis, purely from a technical perspective, and I'm deliberately ignoring everything else that's going on. So let's just have a look at what the charts tell us and see if we can glean anything just by looking at what we see in front of us. So this is the euro daily chart. And there were a couple of pretty interesting things. Straight away, we see that so the objective of this video really is to try and determine what sort of strategy we have going into the coming week. It's Sunday again today, so this is kind of my weekly update. So let's have a look over the last couple of weeks. So we formed a low here. Repeated attempts at breaking through this level at around about 0.99 or thereabouts, just below and just above it. And we formed a lot of reversal type candle patterns, including some dojis, some spikes, some spike lows, some inverse hammer candles, these two here. We've got there's a bullish engulfing candle. We've got a bearish engulfing candle here, in fact. But overall, it looks like we're trying to form a bottom. However, having said all of that, the chart is very bearish. And on Friday, this is Friday's candle, daily candle. We can see we rallied up to this level here, and we'll talk about that level shortly because it's pretty key, and so is the level at which we close. But you can see we rallied up on Friday. We went through this resistance line, this gray line over here, which is a previous support line, obvious support and resistance going back, well, all the way into mid-August, really. And we rallied up through there, looking like it was actually going to be a pretty positive day and a positive close for the euro, but it didn't end up like that. We fell back down quite sharply, and you can see we touched this red moving average, which is the 50-day simple moving average. We also touched this green line here, which is the 50% Fibonacci retracement from this level, this high at the same old number that I've been talking about for weeks and weeks and weeks now, it seems, and that's the 1.0350-ish level, which forms this recent sort of swing high. We fall back beneath there. We've been there below there for quite a long time. We've often closed beneath parity, but having rallied up, broken through this resistance, this gray line, up to the Fibonacci, the 50% retracement, which I've just mentioned, and we fell back down from there, and that's at 1.0120, thereabouts. That's also where the 50-period moving average is, also where kind of close to this downward green trend line that I've drawn from here, going back into June this year. So we're still faltering at these moving averages, at the Fibonacci, and at this downward trend line, which is all very bearish. And beyond that, we can see this blue trend line moving down, and a much longer-term trend line going back into the earlier part of the year, and we're still well beneath that at the moment. So that's what it looks like on the daily pattern. Let me just say two things about this before we move on to have a quick look at the hourly chart, and that is that we did manage to close above parity. It looks pretty weak because of the spike high. It's kind of a bearish reversal candle pattern against all these resistance levels, which I've just talked about, the 50 MA, the 50% fib, the downward green trend line, and so on. But we did manage to hold and close above parity. So this, and not only above parity, but also above this green 20-period moving average, 20-day simple moving average, which is the green line, which also happens to be at parity at the moment. And despite the weakness going into the late part of the afternoon's trading, we actually closed above that 20 MA and above parity. So are we bullish or bearish going into the week? What trading strategy should we take? Now, let me just say right here that I've actually still got hope that the euro has formed a bottom and that we're looking to move higher. And there are a couple of reasons for that. One is that we held above parity. Two, that we did manage to break through, but not close above this horizontal line. But the fact that we broke through it and made a new high, the fact that this daily candle from Friday has a higher low and a higher high compared to the previous candle. And we've retraced back down into a buying zone. Now I'm going to have a look at the hourly chart and tell you where I've been placing my trades, on where I took my trades on Friday. They're still open. So let's have a look at that. And then very briefly, we'll also have a look at the dollar index. So let's go across and have a look at the hourly chart for the euro for the same time period, looking back over Thursday and Friday or thereabouts. Okay, so here's the hourly chart for the euro going back a few days. You remember we talked about these two reversal candles on the hourly chart. I don't know what date it was, but yeah, it was towards the end of August. So I don't know, 31st of August, 1st of September, we saw these two reversal candles. I pointed it out on one of the videos and on Twitter. And I said this was a very clear attempt for the market to try and form a bottom here at around about 0.99. That's the lows around about where we were there. Now let's fast forward to where we are at the moment. And let's have a look at that rally that took place on the last swing upward from the low. Also just around about 0.99, just slightly below there, 0.9880. And we've had this swing up. We had a move up there and a dip, and then another move up. That was late on Friday, or actually sort of Friday morning, and then moving down into these lows where we are at the moment. Now, if we have a look at this, this is a pretty bullish pattern, even though the bearish candle on the daily chart gives us some cause for warning. The fact that we're still in a downtrend, the fact that we're below the 50-day moving average, simple moving average, below that trend line, below the Fibonacci line. There's the same 50% fib that we saw on the daily chart. That's that line there, which we touched and fell back. But have a look at what's happened. We've fallen back into a support zone. Now, if I just make a copy of this line and bring that down to this previous resistance level, which is here. All right, so it's previous resistance formed by that high and that high. And we've fallen back down on Friday just to touch those lines, that line. And if you have a look at the moving averages on the hourly chart, you see that we're holding above the 50 MA. Yes, we are below the 20, but we're above the 50-hour moving average and above the 100-hour moving average quite comfortably. And if you have a look at this pattern over here from these highs, it's a very, very beautiful, potentially bullish bottoming pattern. So we're in a dilemma here, and I'm going to tell you how I'm trading it, and we're going to have a look at the dollar index straight afterwards. But I'm trading this long. I actually bought the euro at the current price level right here. So let me give you my numbers. 1.0370, somewhere I think in the mid 70s in that range, but just about where we are, slightly below where we are at the moment. So we've moved up slightly from there, but that's my position. I'm prepared to add to that on dips down to here, down to around about, ideally we'll hold above parity, which is here. So you can compare this to your own charts and see what you think. And bear in mind, this is not trading advice. I'm just telling you what I'm doing. I could be completely wrong. I'm often wrong. I'm not always right by any means. Yes, I've had a pretty good last few months, but there's going to be a time when I've got things completely wrong. Doesn't matter though, because I've got my risk management and my loss management situation under control. So I'm prepared to buy here. I'm looking to add at around about parity, perhaps slightly lower. I'm allowing for another quick, brief dip below parity, maybe even as low as 99.30 or 40 or 50, somewhere around this level, down towards this sort of congestion area in the middle, and then a move back up again. And ideally, we'll see a move back through this trend line, up through the trend line, up through the, excuse me, the 50% Fibonacci retracement, which is that line there, which I had drawn from the daily chart, and then up through that trend line and up towards this trend line. And perhaps even with a bit of luck, early in the week, we'll move up back up to that 1.0350 level, which I've been eyeing for way too long now. It doesn't matter because I've been buying on dips and exiting on rallies. And now this is my new dip buy right at the current price at around, let's call it 1.0040, thereabouts, willing to add into a dip down to, I would say, probably just below parity at about 0.9980, 0.9990. That'd be a good place to buy. Stop losses beneath this low, or if you really want to be a little bit safer, you can put your stop losses at about 0.99, which would be below most of these lows on the chart here. But if you want to be a bit safer in terms of giving a bit more space to breathe, stops below these current lows at 0.98. I think it's 67, 0.9850, thereabouts. So that's my strategy from a purely technical perspective. There are other reasons why I think that we might see some recovery in the euro. There are a couple of things that worry me, in fact, and that's whether we'll see a continued rise in NASDAQ, fall in commodity prices, and what's going to be said on Tuesday regarding the CPI number. All of those factors will play into this, of course, but purely from a technical perspective, and it's not the only thing I look at when I'm trading, but for today's purposes, I'm just looking at the technicals on the chart, and that's what I see. So I'm long at the current price. You can have a look at that. Call it 1.0040, adding to just below parity or at parity, thereabouts, if need be. Stop losses beneath 0.9950, looking for a rally up to this trend line, which would take us back up to about 1.02, and then 1.0350, which is the top of this last swing high. So that's the strategy for that. Let's quickly have a look at the dollar index, and I'll tell you why that adds a little bit of weight to this analysis. So we'll go across there right now. So just very quickly, here's a dollar index. You can see we peaked above 110.50, actually about 111, I think that was probably on the dot. No, not quite. We didn't quite get to 111, 110.80, thereabouts. We fell back earlier on in the week, rallied back up again, and then this big dip which caused the rally in the pound and the euro and Swiss franc and so on. And then we just hit that 20 period moving average on the dollar index as well, similar to hitting that 50 on the euro on the day chart, and bounced up from there. However, having said all that, this chart, even though we've got a bit of a spike low, looks kind of bearish to me. And because we've closed beneath this green line, which was the previous resistance line, you could fiddle with that a bit and move it around as you want, really. But I've just drawn it at the top of the wicks of the bodies of these candles. We've actually just closed on it, if you draw it precisely on the tops of the bodies of these candles here. But I'm allowing for these subsequent candles to the top of the wicks of those candles, and we've actually just about closed beneath pretty key support on the dollar index, which means that we're probably likely to see some more downside on the dollar. When I say likely, I'm actually saying hopefully, because I've got long positions on the pound and the euro, and I'm actually short on the dollar yen. That one's working out fine because I'm in profit on that one, because that moved down quite nicely. But bearing in mind that the euro, the pound, and the yen and the Swiss franc, all of those, particularly the euro and the yen, which are the main contributors towards the dollar index, have both shown some strength, and the dollar index has shown some weakness. And if we can just carry on moving down from here, we should get down to 107.50, which is where this next support line is, and the 50 period moving average. And hopefully, with a bit of luck, we'll get down to around about 105 on the dollar index. And that will drag the euro up and the pound up and the Japanese yen up. In other words, the dollar yen down. So I've given you my trades. That's the real trade that I've got on. I've got a half a position on at the current level on the euro, as I showed you, the current level at 1.0040. I'm going to add the other half at around parity or just below. And my targets for the euro, as I've been saying for all too long now, are 1.02, and then 1.0350. So that's my strategy going into the week. Good luck with your trading. Hope you have a wonderful time. And bear in mind, there is a really important number coming out on Tuesday, and that's the consumer price index in the US. And that's certainly going to move the markets one way or another. Technically, looks like in our favor, but who knows? It's a very sensitive time in the market, so be careful. Take care.